Why most traders won't scale to six figures in 2026. Now, if you think risking 1% per trade is how professionals scale, then this video is gonna piss you off. And it has nothing to do with strategy, indicators, or how many hours you're staring at the charts. In fact, most of you watching this right now have a winning strategy already. You've had profitable months. You know how to trade, but you're stuck. 10, 20, 30, maybe 50K account if you've had a great year. And 2026 is gonna be the exact same unless you fix the one thing that separates five-figure traders from six-figure traders. And I'm gonna show you exactly what that is in the next few minutes. And if you're serious about scaling, this might be the most important video you watch this entire year. Now look, I have managed hundreds of millions of dollars at a hedge fund. And I was once on the institutional side and seeing things from a very different perspective than retail. And the difference is between people who stay stuck at 50K and traders who break into and scale into that multiple six figures. It's not about finding better setups. It's not about trading more pairs. It's not even about risk management, although all those things matter. I figured all this out after losing $80,000 overnight and having to rebuild from zero, and I changed everything. That's when I went from broke graduate to hedge fund trader to $120,000 months. Now, this video is not for everyone. If you're brand new to trading, you're probably not ready for this. I'm gonna be fully honest with you guys. This is specifically for traders who are already making money, but they can't seem to break past a certain level. So you know how to trade, you have capital, but you're plateauing and you don't seem to know why. If that's you, then please keep watching. See, here's the problem most traders face when they try to scale. You hit 10K in your account, you risk 1%, that's $100. You build it to 30K, you risk 1%, that's $300. You get to 50K, you risk 1%, that's $500. You think you're scaling because the dollar amount has went up, but what you don't realize is you're using the same decision-making process that you used back when you were still at that 5 or 10K account, and that's exactly why you're stuck. Because at 50K, you're trading the exact same way you did at 10K, just with bigger numbers. You haven't scaled your system. You haven't scaled your opportunity. You haven't scaled your edge. You're just doing the same thing with more money. And that's the trap that keeps 90% of retail traders stuck under 100K for their entire trading career. Now, I know all this because I lived it. Let's go back to 2022. I graduated with a master's degree in financial derivatives, upper honors, and I had been trading since 2016. And I was broke. All my friends had jobs, making money, moving forward with their lives, and I felt like a complete failure. After years of trying, I finally built my account to 80K trading crypto and Forex, and that's the first time in my life I'd ever made real money. And then I lost all of it overnight when a platform called Celsius collapsed. Money gone, back to zero, and everyone in my life was like, oh, I told you so. Go get a regular job. This crypto, this FX, this trading thing is fake. And so what I had to do was I wanted to stay in the trading field. I wanted to stay in the FX, crypto, day trading environment. And what I had to do was suck up all my pride, all my ego, go door to door at different hedge funds, different institutions and say, yo guys, look what I've done. I built up from $300 all the way to $80,000 with proper risk management, proper R2R, proper setups, proper strategies. Can I please work for you? And eventually I got hired at a hedge fund because of my knowledge. And for a year and a half, I traded hundreds of millions of dollars for my clients, literally hundreds of millions. And I got a glimpse of how institutions trade and they manage risk. I even had a mentor in the hedge fund that guided me through this shift in my mindset and helped me to fix the blind spots. And in the end, I made them a lot of money. I made myself good money too, but I didn't want to keep doing it for someone else anymore. I wanted to do it for me. And so I quit and I started trading full time using everything I'd learned at that institutional level. And that's when everything changed because I realized the way hedge funds scale capital is completely different from how retail traders do it. You see, most retail traders think scaling means one thing: bigger lot sizes, bigger risk, bigger emotions, but that's not how professionals scale. And that's exactly why most people blow accounts when they start touching real size. I'm gonna fix that for you guys real quick. So let me introduce you guys to what I like to call hedge funded trading. Hedge funds do not win because they predict better. They win because they structure their risk better. When I trade with a $50,000 account, I do not trade it like a retail trader with confidence issues and one setup. No, I trade it like a system. And here are the core principles behind that. The first principle is risk distribution. See, retail traders do this. One trade, 1 to 3% risk, emotionally attached, and one outcome of that trade decides their whole week. Here's what I do. I risk less per trade, but I place more quality trades. So instead of risking 1% on one idea, I might risk 0.25% across 4 different ideas that all fit my edge. Same total risk, but more data points. Less emotional pressure. When you do that, you stop needing to be right. You just need the system to work. The second principle is time frame diversification. See, retail traders live on one time frame, and usually it's the lower ones, the 5 minute, the 1 minute. All that equals is constant stress. See, I run the same strategy across multiple time frames, intraday setups, short-term swing setups, sometimes higher time frame levels. Same logic, although very different time horizons. This smoothens results and reduces overtrading because not everything needs to work right now today. It can work in the next 2 days, 3 days, over the next week. Principle 3 is market diversification. See, retail traders fall in love with one pair, one asset, one chart. No, I apply my edge across multiple markets, gold, forex majors, sometimes crypto. If the setup is there, the market does not matter. Opportunity increases without having to force trades. And the fourth principle is system over size. Guys, retail traders think growth comes from increasing lot size. Professionals increase process quality first. So once you increase your process quality, then your lot size should follow. You know, just better your entries, your risk rules, your execution of discipline, review, journal. Only after the system proves itself, then do you start scaling capital. And that is how you avoid blowing up at higher balances. Here's the most part that I'd say most people miss. When you scale this way systematically, risk stays the same or honestly even decreases, but opportunity increases exponentially. More trades, more markets, more time frames, same rules. And that is how real money is made. At a $50,000 account, I'm not chasing dopamine trades. I am managing literally a machine. Retail traders trade their emotions, but I trade probability at scale. And that mindset shift is everything in the markets. Now, you might say, Ryan, this sounds complicated. You said a whole bunch of crazy terminology of higher time frame biases and strategy scaling and risk execution and discipline. And it sounds complicated because I like to just talk that way with certain financial jargon, but I genuinely run a $4.7 million portfolio with like 3 hours a week, 4 hours a week of, chart time and execution time. And that's on the higher end, because once you have a well-oiled machine, once you have a proper strategy, you're not glued to the charts. You've heard this from many people, and I'm telling you this again, put it in your mind. You're not glued to the charts once you have a proper strategy, because I'm busy. I have other businesses that I'm running at the same time. I'm not solely focused on trading. I mean, sure, every day I can wake up because it's my passion. I read the news, check Bloomberg, check the Financial Times, check certain, stock prices, all that sort of thing. But I'm not glued to the chart. When I see a setup forming, I can, put it on my watch list. And as we get closer and closer to whatever entry price I like, that's when I can sit on the chart for a day, 2-3 hours, maybe for the whole week, and I'm done. Now you might say, oh, Ryan, I don't have enough capital. And I get it. Sometimes you just don't have enough capital. There are, some things called prop firms these days where you can try to get funded, you can get instant funding, you can try to use leverage. I'm gonna be fully, transparent. That's just not gonna work. If you don't have any money at all and you're trying to make money solely trading, it's not gonna work. I wanna keep it honest with you guys because your emotions are gonna get in the way. If you don't have money and you get into the markets hoping and praying to make money so you can, eat that day, pay rent that month, it's not gonna work. You have to go get a job, any job, whatever it is. Just go get a job, save your money until you have enough allocated $2, $3, $5, $10,000 on the side that you can risk. Because if you don't have capital, stay out the markets. Believe me, I'm looking out for you guys when I say that. This is one I've heard people say a lot. What if my win rate drops? Let me just break it down super simply because I hear this question so much. So let's say I currently have a 50% win rate. That means 5 out of 10 trades I'm losing. And let's say when I lose 1%. Okay, that's 5% gone. But when I win, I'm winning a minimum of 2%. That just answers your whole question. So if I'm winning 2% on 5 trades, that's 10%. If I'm losing 1% on 5 trades, that's 5%. 10 minus 5, I'm still up 5%, even if I'm only winning 50% of the time. So win rate is kind of bullshit, guys. I'm not gonna lie to you, okay? Focus on proper risk management, focus on proper setups, forget the win rate for right now, and you'll do much better. Guys, the best traders are not the ones with the highest win rates. They're the ones who execute without emotion consistently. Before I got to the hedge fund, yes, I was making money. Yes, I had ran up $80,000, but every win felt like I had a jackpot at the casino, and every loss felt like I hate my life right now. What do I do? But when I got to the hedge fund, I got mentored properly. I started really understanding that emotions should genuinely be left out the door. The second you open up your laptop and you want to start trading, whatever emotions you have, whatever psychology, fear, greed, but throw all that out and just focus on systematic trading. Once you do that, your entire trading journey, your bank balance, your account balance, your profits, everything is going to change. So guys, if you watched this far, I want to give you guys something that you can do right now, today, after this video, to hopefully better your trading. 4 actionable steps. The first one is the audit phase. Look at recent trades and identify patterns. The second one is edge identification. What setups do I trade best? What setups do you trade best? The third one is expansion phase. Apply those edges to more opportunities. And the fourth one is testing phase. Start small with reduced risk per trade. See, you don't have to overhaul everything overnight. Just shift your thinking from linear to logarithmic. So let me tell you guys why this year is so important. I could sit and say that every new year, you guys say the same thing, same bullshit promises to yourself of I'm gonna change, I'm gonna do this, I'm gonna trade better, I'm gonna make more money, I'm gonna take care of my family. I don't wanna get into that because in your subconscious, you guys already know that. You guys already know the promises that you've told yourself in the past and not delivered on, simply. This year specifically though, I wanna focus on the political uncertainty, the volatility, the rate decisions, crypto, everything is booming and everything is in your favor right now as a trader. We in the financial markets, what we like to do is focus on opportunities to make money. When opportunities come where we can make good money, we have to be there. We have to be ready for them. And with the amount of volatility, the amount of political uncertainty, the amount of wars going on around the world, I mean, if you guys are in the markets right now, you guys know that gold rallied from less than $3,000 to over $4,500. Silver rallied from 20-something dollars to $75, and in China was trading over $100 per ounce. Platinum rallied from $1,000 to $2,400 something, $2,480. These 3 metals are not meant to do that. Their charts look like meme coin charts. It's because there's so much political uncertainty. Everything hit all-time highs. Bitcoin hit all-time highs. The S&P hit all-time highs. Guys, now is your chance. Take action. All the information I'm giving you on this YouTube channel, all the other information that you know, everything that you know about trading, use it because 2026 can really change your life. This can be the year you finally make it in the markets. And guys, linear traders are gonna miss the opportunity. They're gonna keep making the same BS mistakes they've made in 2025 and 24 and 23, but logarithmic traders, the ones who scale properly, are gonna change their lives in 2026. Let me show you guys the 2 possible futures in front of you right now. This is not motivational, not dramatic, just honest. Path 1, you keep trading the same way, 1 setup at a time, same pair, same time frame, risking a little too much because you want it to matter. Your account doesn't blow up, it just doesn't go anywhere. A 5K account goes to 5.6, then 4.9, then up again. Emotionally, you're cooked, you're tired, every trade feels important, you're gonna overthink your entries, hesitate when it comes to exiting, revenge trade after you hit losses. And it's not because you're a bad trader. Again, you know how to trade because the structure you're using forces you to care too much about each trade. And after a year, that frustration is gonna be so real and you're not gonna panic, you're gonna be just disappointed in yourself. Path 2, you change nothing about your edge. Nothing. You don't change anything when it comes to your edge, only how you scale it. So instead of pushing size, you're gonna spread risk, multiple trades, multiple markets, same rules. Your account is gonna grow slower at first, 100%. However, it's gonna grow smoother. And that 5K account is gonna become 6.2, then 7.8K, then 10K, all while emotionally you're calmer. And 1 loss doesn't matter. And 1 win doesn't excite you either. You're gonna stop watching every little tick on your laptop, on your trading view. You're gonna trust the process because it's no longer fragile. Consistency replaces hope. Here's the main difference, guys. Path 1 is linear thinking, bigger risk, same stress. Path 2 is logarithmic scaling, same risk, more opportunity. You are not trying to win more, you are trying to care less. I'm telling you this as someone who's been on both paths, by the way. And if you want this to work long term, stop trading like every trade needs to change your life. It doesn't. Build something that survives you being a human being, your human emotions, your human psychology. Build something based around that. Look, I'm not here to convince you to do anything. You're gonna make your own decision about how you want to trade. But I'll leave you guys with this. The information illustration that I gave you is so real. This is how institutions scale. This is how I went from managing other people's money to making $120,000 a month for myself. And if you apply it, even just starting small with 2-3 extra setups per week, you'll see the difference immediately. Now, if you want help implementing this, if you want someone who's done it to walk you through specific situations and build you a custom scaling plan tailored just for you, I do work with traders one-on-one, but I only take on a limited number of people because I'm still actively trading and I want to give real attention to everyone I work with. So if that's something you're interested in, there's a link below where you can apply to work with me. I'm going to review your situation, and if I think I can help you, we'll get on a call. But even if you don't work with me, take what you learned in this video and please apply it. Start thinking logarithmically instead of linearly. Test it, track it, see what happens, because at the end of the day, I just want more traders to succeed. And this framework, it works. I promise you, it works. You know, guys, when I lost that 80K, I thought I was done, and I thought trading was not it for me, that I'd never make it. But the only reason I'm here today, making $120,000 per month sometimes, trading full-time, living the life, buying the things I always wanted, is because I didn't give up. And I changed how I approach scaling. Look, you've already proven you can trade. You've had profitable months. You know your edge. Now, it's just about scaling it the right way. And honestly, you're closer than you think. 2026 could be your year, and I'm honestly rooting for you. Thanks for watching, and I'll see you guys in the markets. Peace.